Open at least. Of course, also Westpac out with its full year numbers too. Chris Weston from IG is across it all and joins us now live from Melbourne. Chris, good to see you there. What happened Friday night? You have this great read, well certainly a better than expected read in US jobs, yet the markets sell off and the commodities sell off. What was going on?
Yeah, well, I don't think there was any one smoking gun. I think, you know, if you look at the headline numbers, this improvement, this continued trend of improving US data was clearly evident there. I mean, the number of underemployed people, that rate ticked down. The actual unemployment rate stayed below the important number 8%, and that was due to the 0.1 of a percentage point tick up was due to more people coming back in, which could be construed as a positive spin. The actual household survey increased as well. So I think at the margin, certainly the numbers were much stronger than expected. There was some negatives for, you know, to keep the bears relatively active, and that was the amount of, you know, hourly earnings were down, the amount of people being paid was down slightly as well. But I think what we saw, the really nice pop in the market, you know, the Dow was up about 56 points on open, the S&P traded up to about 1434, up a few points or so, and then I think that's really when the market came off. Now, a number of factors, just to answer your question why that was. I mean, certainly from the data side of things, there is this, I suppose from a loose connection, you could say that the Fed, a lot of people were expecting them to come out and do renewed asset purchases in December. The improved data we're seeing, some people are suggesting, gives them limited scope to do that. I still think that they're going to do that in December, despite this improvement we're seeing. I think you know, you can also look at the dollar. I think you've got to look at the dollar on the back of this. Now, what we did see is the dollar index actually was up about 0.7%. Euro dollar traded down to about the 128.20 level. That was being offered throughout the session as well. And of course, you know, that stronger dollar really saw the commodities trade collapse. Gold was absolutely destroyed. So was WTI. So was Brent. So was copper. So that strength that we saw in the US dollar because of the less scope for QE really saw the commodities trade fall out of bed. Then I think you can look on a stock side of things. Now, very rarely do you see one stock influence the whole market. But that's exactly what Apple does. It's a market leader. People were selling the leaders, and that's what we saw. As soon as it traded through the 200-day moving average at $588, yeah, we saw the S&P collapse as well, and I think that was really the big driver as well. Apple just seems to have lost its mojo at the moment, and I think people are looking to sell that. It's the first close below the 200-day, which the long-term fund managers like to trade above since June 2011. So, you know, that was part of the reason as well. I think people were hedging their fiscal cliff exposure using the US dollar. I think, you know, the polls from what we saw on the weekend still show this is very much a neck-and-neck race at the moment between the Republicans and the Democrats, and I still think, you know, there's a case for stock market appreciation for both parties. So I think it's going to be interesting. But yeah, I think you've got Apple, the dollar, and you know, I think that really caused the big collapse in commodity prices.
It is a massive week ahead. Just run us through, I guess, the key events and how they're likely to wound markets.
Well, I'm looking very closely at Greece. I think Greece is going to have a massive influence on European markets, going to have a massive influence on the euro, so therefore it's going to have a big influence on commodities as well. Now, we know there's a big vote on Wednesday on those reforms that we've seen. We've just seen Mr. Tsipras who come out this morning suggesting that he's going to vote against these labour market reforms. Now, if that doesn't go through, yeah, there's going to have big implications on how the Troika finds things when they come out with their full findings on the 12th. So I think this week everyone's going to be looking at Greece. That, you know, they run out of money on the 15th of November, and clearly if they don't vote through these reforms, then the probability of them getting their money is going to be very low. Thus, you're going to see a massive sell-off in risk assets because there will be a default there. So I think you've got to keep your eye on Greece and some of the reforms they're going to be going for. Yeah, locally we've got the RBA. I mean, that's just such a on-edge situation. I mean, most 25% economists are calling them for keep rates on hold. So the markets expect, or the economists are expecting a cut, but obviously the credit markets see this more as a 50-50 event. Obviously, you've got the US election. I think what's been interesting here has been that the different Fed members from different states have had to have this kind of blackout period. They've been allowed to talk in recent times, but they haven't been able to influence the election. They haven't been able to talk too dovish or too hawkish. They've had to keep their rhetoric relatively well contained. Now that's over. You know, this week is the Fed members can say exactly what they want. So, you know, we're going to see much more increased rhetoric from different Fed members. That's going to push asset prices around quite clearly. You've got an ECB rate decision, which probably isn't going to herald too much. But I think, you know, just Mr. Draghi's view on inflation and growth going forward is going to be interesting. Obviously, you've got the China handover this week. You don't expect too much from that. That's going to be you know, it starts on Thursday and goes on for goes on till mid-November. You've got the Bank of England as well. There's certain economists there expecting them to increase their asset purchase programme. And I think all of this, you've got the VIX, the Volatility Index, hovering around 7.6 at the moment. I wouldn't be surprised to see that spike up this week because there's just so much going on with them. And obviously the centrepiece is the US election there.
So, what's your opening call then for the ASX 200 today at least?
We've got the market down 19 points now. Yeah, you can look at the SPY, and I saw your graph saying it was down 3 points. What we've got to remember here is that the SPY reopens at that changes from 10 past 5. That's when the SPY reopens, and that's the SICOM session. So that was only down 3 points or so. But I think what's interesting here is that there's the big movement between 10 past 4 when we get the cash market close or the auction close up until that point there as well. And I think we did see a big deterioration in the SPY from that point. So I think we're actually going to see the ASX cash coming off quite sharply on open. Everything as it stands at the moment is suggesting we're going to see the market down 19 points. What I will look for is when the US futures open pretty much in our time, that they could come under a bit of pressure. If you look at euro dollar this morning as a proxy, it's down about 15-20 points or so. So the weekend news has caused people to look to sell risk on open thus far. But what I will say is I think the Westpac result that we've seen this morning has been good. I think the banks will be saying this is probably the standout bank in terms of the earnings season bank. So that could see the market, catch up a bit of steam there. But I think BHP's down 12 cents on based off its ADR at the moment. News Corp's going to be firmly in focus. They're reporting this week, hoping for some good numbers. The iron ore price is steady at 120, so there's a good chance we're going to see names like Fortescue hold up at that $4 mark as well. But I think the Westpac result looks like it could spur some buying on open, and I think that 19 points that we've been calling the market, potentially, hopefully, we'll see some buyers coming through. But it's going to be difficult, with the event risk that I've been talking about. You've got to be a pretty brave soul to be buying, with your ears pinned back ahead of that.
Yeah, absolutely. Thank you so much for that, Chris, and chat to you throughout the session. Well, let's just get some more.